Hello everyone, my name is Dan Sampaio and welcome to today's Mondac webinar in association with Patricios Legal, who will be discussing ways that individuals can maximise their business and investment potential in Cyprus. Today's discussion topics include the Cyprus Tax Regime, covering the main tax benefits and key incentives, Reorganizations, covering a favourable legal framework, the EU Mobility Directive, Re-domiciliations, cross-border conversions, discussing the benefits of changing the legal seat of your company to Cyprus, and real estate investment, insights into the evolving landscape of the real estate market in Cyprus and discussing market trends. Now, before I hand over to the panel to begin today's webinar, a quick housekeeping item. You can submit questions to our panel by typing them into the questions pane of the toolbar on the right-hand side of your page, and we do encourage you to get those questions in. We will endeavour to answer as many as possible. It's now my pleasure to hand you over to our panel from Patricios to begin. Thank you very much.
So welcome all. I'm Leah Giordano, Senior Partner at Patricios Legal, and I'm very happy that we have a wide and diverse audience today from various countries across the globe. We have a lot of attendance from the UK, but also from Europe, from non-EU member states, Norway, Ukraine, but also from Asia, many of you from India. I can see quite a few from Canada and Australia, Hong Kong, UAE, Brazil, South Africa, Nepal, and Vietnam, to name a few. And this is what Cyprus is primarily known for, in fact. It's a bridge connecting Asia and Europe. It is a bridge to emerging markets in Africa and in the Middle East. Dan already mentioned the topics that we will discuss. I will start by outlining the main tax benefits, but also give you some key incentives for both companies and individuals. So if you can move on to slide 4, please. Thank you. Cyprus is a jurisdiction which traditionally offers stability. Sorry, something technical happened there. Cyprus is a jurisdiction which traditionally offers stability, a reliable and impartial legal system. It is a jurisdiction which adheres to high standards of transparency and regulatory compliance. It offers a business-friendly environment, and it has a most favorable tax regime. We have been in the EU for 20 years and in the Eurozone since 2008. We have attracted a large pool of talent and are increasingly being recognized as a business and technology hub. Next slide, please. Our company law is very flexible and modern. There are no restrictions on foreign share ownership. There are no exchange controls. A company can be set up at low cost and in a straightforward manner. We have the Cyprus International Trust, which is widely used for proper family planning, for wealth planning, as well as asset protection. Settlers can settle into a Cyprus International Trust any type of assets, including shares, real estate, vessels, yachts, other movable and immovable property situated anywhere in the world, including Cyprus. There's other obvious advantages. Our island is the third largest in the Mediterranean, with modern infrastructure, with a cosmopolitan flavor, I would say, but at the same time with low crime rates. Cyprus is also a country rich in historical significance and home to remarkable archaeological sites. But I would say that what truly sets us apart is the exceptional quality of life and our mild Mediterranean climate. Next slide, please. So these are the major fiscal advantages for Cyprus limited liability companies. Our corporate tax rate is at 12.5%, one of the lowest corporate tax rates in the EU. Profits from the sale of shares are tax-free. Non-resident shareholders, whether companies or individuals, receive dividend income tax-free. The test for determining tax residence for companies is the management and control test, with minimum requirements that the majority of the directors should reside in Cyprus, that the meetings of the board should take place in Cyprus, and the general policy of the company must be formulated in Cyprus. Withholding tax is applied only in cases where the recipient is an entity on the EU list of non-cooperative jurisdictions, the EU blacklist. Non-Cyprus tax residents or non-domiciled Cyprus tax residents who are shareholders of a Cyprus company are not subject to special defense contribution, which is at 17% for residents, for tax residents. Notional interest expense deduction, NID, is available on new capital. Profits earned from a permanent establishment abroad are fully exempt from corporation tax. There is no capital gains tax except on the sale of immovable property situated in Cyprus. So CGT is imposed on profits from the disposal of immovable property in Cyprus, and this includes not only direct sales of the immovable itself, but also the sale of shares in companies that own immovable property. The current CGT rate is 20%. Credit is provided for foreign tax paid. Tax losses can be carried forward for up to 5 years. And I mentioned last but not least, the tonnage tax system in shipping. So Cyprus tax resident ship owners and ship management companies may qualify to be taxed on the basis of their of the net tonnage of the ship rather than on profits. In addition, there is no tax levied on the disposal of qualifying ships, and also dividends which are distributed out of companies under the tonnage tax system are not subject to a special defense contribution. Next slide, please. Cyprus is an attractive location for the establishment of an intellectual property holding and development company, which offers an efficient tax rate, as well as the legal protection afforded by the EU member states and by the signatories of all major IP treaties and protocols. The IP regime is compliant with international developments in the tax treatment of IP income. In line with the Nexus approach, under the IP tax rules, 80% of the overall income derived from a qualifying intangible asset is treated as a deductible expense. This can result in an effective tax rate of just 2.5%. Qualifying intangible assets include patents, computer software, utility models, and other legally protected IP, such as non-obvious, useful, and novel IP assets. Now, a link is required between the income taking advantage of the relevant IP rules and the extent to which the taxpayer has actually performed research and development that generated the IP asset. R&D activities should be performed by the same entity, i.e. the entity which owns the IP. So R&D should take place in Cyprus. So it links, the test is substantive. It links substance with value creation. You need to have employees in Cyprus, and those employees will have benefits, which we will see in a while. And next slide, please. Okay, so this is a typical structure. The R&D is performed by the Cyprus company which owns the IP asset. You can also see that there is no withholding tax on dividend distributed to the non-resident holding company. Next one. Next. There are progressive personal income tax rates for individuals who are tax resident in Cyprus. There is also special defense contribution on passive income, i.e. income on dividends, interest, rental income, and royalties. However, non-doms, maybe move to the next slide, please. Yeah. There is a separation for Cypriot tax residents between domiciled and non-domiciled residents. Next slide. I will explain the non-doms on the next slide. Non-domiciled residents are those individuals who are not considered as Cypriot according to the law, i.e. who do not have a domicile of origin or a domicile of choice in Cyprus, and who were not tax residents of Cyprus during the 17 out of the last 20 years. So what tax exemptions do non-doms enjoy? Non-doms are exempt from payment of any special defense contribution which is applicable on dividends, interest, and rental income. The exemption can apply also for Cypriots with a domicile of origin that were not tax resident in Cyprus for a period of the last of at least 20 consecutive years prior to 2015, July 2015, and who choose to return to Cyprus. So if you or your client is now enjoying a non-dom status in the UK and wants to explore another jurisdiction after the abolishment of the UK non-dom regime, Cyprus comes in to offer quite an attractive alternative. Next one, please. There is also a tax incentive which provides that a natural person who takes up first employment in Cyprus as of January 2022 enjoys a tax exemption of 50% for a period of 17 years from the date of employment, irrespective of whether they changed employers, provided they have previously not been resident in Cyprus for a period of at least 15 consecutive years, and they earn more than 15,000 euros per annum. Individuals who first take up employment in Cyprus but with annual emoluments lower than 15,000 will be eligible to a 20% tax exemption or 8,500, whichever is lower, for a maximum period of 7 years. An individual must have been employed abroad for at least 3 consecutive years prior to the commencement of employment in Cyprus in order to claim this exemption. So who is a tax resident of Cyprus? An individual can become a Cyprus tax resident either through the 183-day test, i.e. if he spends more than 183 days in Cyprus in a given year, or on the 60-day rule. This rule allows individuals to establish residency in Cyprus even if they only spend 60 days in Cyprus per year, provided they meet certain criteria. If we can go back to slide 10 for a second, please. Slide 10. No? Yep, thank you. As with corporations, there is no capital gains tax except on the sale of immovable property situated in Cyprus. Again, there is credit provided for foreign tax paid. We have no inheritance tax, no wealth tax, no estate duty. And this is all from me for now. Let me pass you on to Angeliki, who will talk about reorganizations locally. Thank you.
Good day, everyone. My name is Angeliki Epaminonda, and I'm a partner at the firm. I specialize in corporate M&A and financial law. So following the insightful presentation by my colleague Leah, I will on my part go on to highlight the local reorganization tools for Cypriot companies available in Cyprus, focusing on those which are widely used and their benefits. So local reorganizations of companies are based on 2 main legal frameworks, sections 198 to 201 of the Companies Law and section 30 of the Income Tax Law. Sections 198 to 201 provide the mechanism for carrying out the procedure, and section 30 of the Income Tax Law sets out the types of reorganizations that can be carried out. So as businesses are constantly developing, they may be expanding, redirecting their focus, opening up new sectors, shrinking their operations, diversifying, building new synergies. These reorganization tools are excellent tools which can assist in all of these changes. So next slide, please. So what are the options? There are different types of reorganization procedures, ranging from merger, division, partial division, transfer of assets, and exchange of shares. We will focus on the most used procedures, which are mergers and partial divisions, and we have noticed that there is a trend for these two procedures over the last few years. And I'll explain them in more detail. So I'll start with a merger. In simple terms, a merger is when two companies become one entity. So a merger can be in the form of an upstream merger, where the holding company, the shareholder, absorbs its subsidiary. A downstream merger where the subsidiary absorbs its holding company. Or it can be a merger between two related or unrelated companies. They can be sister companies, or they can be completely unrelated. The assets and liabilities of the entity which is being absorbed and essentially dissolved are transferred to the new or pre-existing company. And if necessary, shares are issued to by the absorbing company to the shareholder of the absorbed company. So the absorbed company essentially ceases to exist once the procedure is completed, and it transfers all its assets and liabilities to the absorbing company. This procedure has been used as an alternative to a liquidation, where the stigma of liquidation is desired to be avoided, since the dissolution of a company is the dissolved company is dissolved without having the stigma of an actual liquidation. And another factor which plays an important role is timing. Liquidation takes a lot longer than a merger. So a merger is usually more the preferred option in terms of timing. So that's an overview regarding mergers. I will go on next to partial divisions. So it's another tool which is widely used. It's a procedure where, in simple terms, a company is split into two. So an existing company, without being dissolved and thus without ceasing to exist, transfers one or more of its business sectors to one or more pre-existing or new companies. So what is a business sector? A business sector is defined as a sector where the total assets and liabilities constitute, from an organizational perspective, an autonomous business capable of operating on its own. So the existing company must retain at least one of these sectors. An example of business sector is, let's say, a company which manages leasing of real estate belonging to third parties, so it provides lease management services, but also holds immovable property and receives income from leasing its own immovable property. These two are considered as two distinct business sectors. And the company, so the company can decide to transfer one of these business sectors to a new entity. And the company which is receiving the transferred business sector may be required to issue shares to the shareholders of the transferor company. So examples where both mergers and partial divisions have been used are, for example, when a buyer wishes to buy a company but does not want all the business sectors. The seller can restructure the company by creating, let's say, a new company or using a pre-existing company and transferring the undesired sector to the other company, thus segregating it from the target. Another example for a partial division is where a company which belongs in the same group of companies is no longer used, is no longer useful, and is in order to eliminate operational expenses, the shareholders decide to merge it to have it dissolved by way of merger into one of the other companies in the group. So these two tools have been very widely used over the last few years and have provided numerous solutions, much quicker solutions and more effective solutions. And of course, they can be used, often they are used in combination. So how are these procedures implemented? Next slide, please. So although the procedure involves obtaining a court order, the sanction from the relevant district court, they are fairly straightforward once all the documents are in place. So it's important to have correct preparation to ensure that all necessary documents are obtained before filing the applications with the court, so that there is not a lot of back and forth with the judge who will be examining the procedure. So just so you can get an idea of the procedure, in general, this involves preparing up-to-date financial statement and management accounts, obtaining consents from creditors if the companies have creditors, entering into a scheme of arrangement, which is essentially an agreement, a short agreement setting out the terms, preparing petitions, filing them with the district court, obtaining a court order, and once the court order is obtained, this is filed with the Cyprus Registrar of Companies. And if shares are issued, the relevant notification forms for the issuance of shares are also filed with the Registrar of Companies. In terms of timing, this varies because there are a number of factors, but from our experience, it can take between 1 to 3 weeks from the date of filing of the applications with the court. And once the court order is obtained, the registrar will need between 1 to 2 weeks to process and record either the dissolution or the partial division. So next slide, please. There are certain tax exemptions associated with reorganizations. I have set some of those out in the slides. So following the completion of the reorganization, whether it's a merger, partial division, and whether it relates to transfer of shares or transfer of immovable property, then once it's completed, the relevant forms can be filed with the tax authorities in order to obtain tax relief or tax clearance. So there are quite a few tax exemptions, and some of these include no capital gains tax, no taxation on profits resulting from the merger, stamp duty exemptions, no land registry fees for the registration of title to immovable property, which is quite significant. But in order for the income tax authority to give these tax exemptions, it must be satisfied that the reorganization has a proper commercial and economic purpose, and that it's not done for tax evasion, reduction of tax liability, or postponement of tax payments. So this is more or less it. In a nutshell, I tried to just put the basics down so you can get a general overview. Of course, we would be happy to provide more details if someone is interested to find out more information. And I will pass you on to my colleague Angelos, who will give you a brief overview of the cross-border options in terms of reorganization of companies. Thank you very much.
Thank you, Angeliki. Good afternoon, everybody. My name is Angelos Onisiforu. I'm also a partner at Patrikios Legal, responsible in the financial and corporate departments of the firm. Today, I'm going to talk more about the cross-border mobility directive and how this has been incorporated into the Cypriot legal framework. It has been a long-awaited legislative act, as its aims was to bring a level playing field among all member states. It has been adopted in our legislation in March 2024, And allow me to say from an empirical point of view, because we have been fortunate to have cases being dealt with the cross-border mobility directive, that its aims are largely achieved, mainly due to the fact that there is increased transparency and legal certainty among all member states. We have seen the protections for employees, minority shareholders, and creditors to be strengthened. And because of these factors, we believe that economic integration will be promoted, and we will see much more development in relation to this sector within the EU. So next slide, please. So without any further ado, let's go dive into the current legislative framework. In a nutshell, a cross-border merger is a legal process whereby two companies in two different member states merge together to form a single entity. The eligibility criteria for this process are firstly that the companies taking part into this process need to be limited liability companies, and as the definition suggests, they need to be located in two different member states. Next slide, please. So the cross-mobility directive, as has been incorporated into our legal system, has introduced 4 different types of merger. First, we have the cross-border merger by acquisition, whereby one company absorbs another company by taking over their assets and liabilities. The result of this is that shares are being issued to the members of the dissolved company. The second type of cross-border merger is in relation to the merger by a formation of a new company. Here we have two companies which they both dissolve to transfer their assets and liabilities to a newly formed company. And the shareholders of the dissolved companies receive shares in that newly formed company. The third type is the merger by an absorption of a subsidiary. This is by far the most used type of merger that we have seen being used in practice. As the definition suggests, the parent company actually absorbs a wholly owned subsidiary. There is no change in the shareholding structure of the group, thus no shares are being issued. And fourth but not least, which is a new addition actually, is the cross-border merger to an existing company. The principle here is that all companies taking part in the cross-border merger are owned by the same person, and in essence, you have two companies which are being dissolved and transferring their assets and liabilities to an existing company, again owned by the same person. No shares are being issued because all companies are owned by the same person. As regards the procedure to be followed, there are certain documents that needs to be put in place. The most important, I will say, document is the draft common terms. This is jointly prepared by the councils of the merging company. The information that must be contained in this document is determined within the mobility directive. Unfortunately, due to time constraints, I cannot go each and every element of this document, but what I will say is that in essence, the information that needs to be included therein is the basic information as regards the type of the companies, the shares that are going to be exchanged, the consequences on employment, and any special rights are going to be provided. In essence, both councils exchange information as regards the assets that are going to be contributed and the shares that are going to be provided in the new structure and/or entity. Next, please. in addition to the draft common terms, there are also certain reports that they need to be drafted. The first and most important report is the board report, which is being prepared by the board of directors of each of the merging companies, which in essence explains the legal and economic implications of the merger to both employees and members of the company. The board report needs to be provided to members and employees at least 6 weeks before the general meeting of the company. The next report that needs to be provided is the independent expert report. In essence, an expert is being appointed following an application to the court, whereby it will evaluate the fairness and of the process to be followed. In essence, what the expert will be called to opine upon is whether the shares provided as in relation to the net asset value that is going to be contributed in the new entity corresponds with the amount of shares in the entity that is going to continue as a shareholder. This expert report can be dispensed with if there is agreement between all members of the company, or if the company has only one single member. Last, the expert report needs to be available to all members of the company at least 1 month before the general meeting of the company. Next, please. So once the drafting of this document has been dealt with, the next step is the filing of the prescribed notification to the registrar of companies. In essence, the draft common terms together with the independent expert report will need to be filed with the registrar of companies. The notification actually is in a form that is prescribed by the registrar of companies and serves as a manner to inform employees and members of the company that the company is going to proceed with its cross-border merger, inviting creditors, employees, and the members of the company, of the merging company, to submit any comments they have as regards the cross-border merger at least 5 days before the general meeting of the merging company. Next. So once a month has passed from the publication in the official Gazette, following the filing in the register of companies, the approval will need to be sought by the general meeting of the company. In essence, the shareholders who have the right to participate and vote will need to consider and if they think fit, approve the draft common terms together with any accompanying reports, such as the board report and the independent expert report. Approval can be obtained by a majority vote of 75%. However, please take note that there might be custom and tailor-made articles where a higher majority vote is being required. We have seen majority votes varying from 75 to 90%. The next step depends on whether the business is going to continue, let's say, in the Republic of Cyprus, or whether the business will continue in another member state. If the cross-border merger will have the effect of the business continuing in another member state, then that will mean that a pre-merger certificate will need to be obtained from the jurisdiction that the business is living, in this case scenario from Cyprus. An application will need to be filed with the court within 3 months from the general meeting, and for the purpose of actually obtaining a court order stating that all legal and procedural matters have been complied with. the Mobility Directive and our law states that once this pre-merger certificate is issued, this certificate is sent electronically via the internal registers maintained by the registrars of companies across Europe electronically. Unfortunately, we have not seen yet this practice. What we do is to send the pre-merger certificate manually to the jurisdiction where the merging companies are going to continue. Likewise, if the business is going to continue in Cyprus, once the pre-merger certificate is received from the jurisdiction that the business is living, an application will need to be filed within the district court in the respective district court in Cyprus for a final order of the cross-border merger, which will in essence confirm that the cross-border merger has been completed and the merger date will take effect from the date as such will be specified within the application requesting the order. Next. So, as you can appreciate, this is a very useful tool for businesses because it automatically transfers all assets and liabilities. It dissolves companies without liquidating them, thus saving an enormous amount of time, and contracts and employment benefits continue to the where the business is going to continue. Next slide, please. So, in addition to the cross-border mergers, the Mobility Directive has also introduced certain changes and additions as regards the cross-border divisions. What I must state from the outset is that the procedure that I have just explained as regards the how a cross-border merger is going to unfold remains the same as regards cross-border divisions, but let's take that from the beginning. A cross-border division is actually a legal process by which a company transfers part or all its assets and liabilities to another entity or entities. The eligibility criteria are the same. The companies taking part in the division needs to be limited liability companies, and the companies must be located and situated in different member states. Next slide. The types of the cross-border divisions are actually three. We have the full division, whereby the entire assets and liabilities of a company are split into two or more recipient companies, and the members of the dividing company receive shares. We have the partial division, as Angeliki has kindly explained, whereby an economic sector is being transferred to another company. Again, members of the company which is going to go into the division receive shares in the company where the assets are going to be transferred. And last but not least is the division by separation, whereby specific assets and liabilities are transferred to recipient companies. Again, shares are being issued to the dividing company. The next slide,
Angela,
please.
if you could conclude because you're a bit over, please.
Okay, thank you. So, as I have stated, the procedure remains the same. A draft common terms will need to be put in place. Next slide. The reports, we have, again, similar with cross-border merger, the board report and the independent expert report, which will deal with exactly the same things as in the cross-border mergers and have the same timelines, meaning that the board report will need to be provided 6 weeks before the general meeting, and the independent expert report 1 month before the general meeting of the company. Next slide. The notification again is the same. Once the report and the common draft terms are ready, a notification will need to be made to the Registrar of Companies 1 month before the general meeting of the company, containing the draft common terms of the division, the notification in the prescribed form, and the independent expert report if that is applicable. Next slide. Once the notification is ready, then an approval will be sought in the general meeting of the company with 75% or more, depending on the articles of association of the company. And again, depending on whether the business is leaving from a jurisdiction, the pre-merger certificate will need to be obtained to confirm the compliance with the procedural and legal requirements, or if the business is coming to a jurisdiction, the final court order is going to be obtained following the pre-merger certificate, the pre-division certificate, sorry. Next slide. So there is as Angeliki has stated in her presentation as well, in case of any doubt and in case that certainty is required, a tax application can be made to the tax department explaining the process that is going to be followed and obtain an opinion from them that this structure or this scheme that is going to be followed is tax exempt. The threshold for this is that the transaction must reflect a genuine economic activity and not be perceived as a tax avoidance scheme. So thank you very much. I'm going to pass now to my colleague Nicoletta, who is going to talk about cross-border conversions. Thank you very much.
So thank you, Angela. Hello, everyone. My name is Nicoletta Christofidi. I'm a senior associate with the law firm. And today I will be presenting to you re-domiciliations and cross-border conversions. So these are two processes by which you can continue your business in Cyprus without the need to establish a new company, but by relocating your existing company. So let's begin with the re-domiciliation process. According to the Cyprus Companies Law, which would be the applicable law and would be referred to as the law, an overseas company, the constitutional documents of which enable it to continue under the legal regime of another approved country or jurisdiction, may apply to the Cyprus Registrar of Companies, the ROC, to be registered as a company continuing in Cyprus, according to the laws of Cyprus. Next slide, please. There are three important items to check then to see whether a company can redomicile to Cyprus. The first is that it must be an overseas company, which means that it must be a company registered in a third country, not a country being an EU member state. The second is that the constitutional documents of that company must include clear provisions enabling the company to continue to another jurisdiction. And the third is that given that the company has obtained a consent or authorization by the competent authorities in the foreign jurisdiction, it would need to apply to the ROC to be registered as a company, as a continuing company in Cyprus. Next slide, please. So 10 simple steps to redomiciliation. The foreign company shall instruct its foreign counsel to check the company's constitutional documents to ensure that provisions exist allowing for the redomiciliation. Once this is confirmed, the foreign company shall appoint a Cyprus counsel who would be the authorized representative to take all necessary actions and make the filings with the ROC. The foreign company shall choose a name that the company wishes to have when it comes to Cyprus, and the Cyprus Council would proceed with a name approval application with the ROC. In the meantime, the foreign company would need to make all the changes to its structure, give all necessary notifications, obtain consent, settle its obligations abroad, and ensure that an official notification is given to the authorities of its country of incorporation, so that it would be able to proceed with the filing of the necessary documents in Cyprus for its registration here as a continuing company. The necessary actions in Cyprus would involve the filing of a form called ME1 form, along with all accompanying documents, which will be explained on the next slide, for the examination of those documents by the ROC. If the ROC is satisfied, the ROC will issue a temporary certificate of continuation of the company in Cyprus, which will need to be presented to the foreign authorities for a document confirming the deregistration of the company from that foreign jurisdiction to be issued. Within 6 months from the date of the issuance of that temporary certificate, and provided that the deregistration of the company in the foreign jurisdiction has been concluded, another form called ME4 form would need to be filed with the Cyprus Registrar of Companies, so that the ROC would issue the permanent certificate of continuation of the company in Cyprus. The date appearing on that certificate would be the date from which the company would be deemed to be a Cyprus company. So the accompanying documents that would need to be filed along the ME1 form would be the corporate approval of the foreign company authorizing the redomiciliation, the Cyprus Memorandum and Articles of Association of the company that would replace the existing constitutional documents of the company, a declaration signed by a duly authorized director of the company confirming the solvency of the company and that no pending criminal or administrative proceeding exists against the company, a good standing certificate issued by the foreign authorities, a document confirming that all consent have been granted by interested persons, including employees, bondholders, creditors, and so on, if applicable, a copy of the certificate of incorporation in the foreign jurisdiction, and details of all directors, secretary, and the shareholders that the company would have once it is registered in Cyprus. In relation to public companies, it would also need to file the most recent prospectus, and if the company is listed on a recognized stock exchange, the relevant consent by the stock exchange for the redomiciliation. For companies carrying out activities which require specific license, an official consent would need to be obtained by the pertinent authority in the foreign jurisdiction. And if the company wishes to continue with such operations in Cyprus, it should be registered with the pertinent authorities in Cyprus and obtain the relevant license before it commences its operations here. The ROC can ask for any other documents that would deem necessary for that particular case to be filed as well. All such documents would need to be apostilled or certified by a certifying officer if these are executed in Cyprus, and everything would need to be translated in Greek before being filed with the ROC. Next slide, please. So as to the timing required, we cannot estimate the exact timing required for the redomiciliation to be concluded. However, from our experience, we note that the redomiciliation process can turn out to be a very straightforward and considerably quick process if all the steps are followed correctly and all people and authorities involved cooperate smoothly and without delays. In general, we could say that the procedure could be completed within 6 to 8 months from the day that the foreign company decides to initiate the redomiciliation process. Next slide, please. So, Angelos introduced the Mobility Directive, which also provided for the cross-border conversions. In essence, the cross-border conversion, according to the Cyprus Companies Law, is the operation whereby a company, without being dissolved or wound up or going into liquidation, converts the legal form under which it is registered in a departure member state into the legal form of the destination member state and transfers at least its registered office to the destination member state. So in practice, this is a process to be followed if a company registered in an EU member state wishes to continue as a company registered in another member state. It is the redomiciliation within the European Union, let's say. And So the terms company, departure member state, destination member state, and converted company shall have the same meaning as in the mobility directive. Next slide, please. As to the law that shall apply to each part of the cross-border conversion process, according to the company's law in the mobility directive, the law of the departure member state shall govern the part of the procedure that needs to be complied with in connection with the cross-border conversion in order for the pre-conversion certificate to be issued. And the laws of the destination member state shall govern the parts of the procedure which need to be complied with following the receipt of the pre-conversion certificate. So if Cyprus would be the destination member state, then the laws of Cyprus would apply once the pre-conversion certificate has been granted by the authorities of the departure member state. Next, please. Next slide, please. So the actions that would need to be taken in Cyprus once the pre-conversion certificate is issued is a filing of a petition to the Cyprus courts, which are the competent authority to examine the legality of the cross-border conversion, and would in practice ensure that the company complies with the provisions of the Cyprus Companies Law in relation to the incorporation or registration of the company in Cyprus. And if applicable, it would ensure that the relevant mechanisms are in place for the participation of the company's employees. The petition shall comprise of the draft terms of the cross-border conversion, which would be approved by the general meeting of the company that took place at the departure member state. And once the Cyprus court determines that all conditions and procedures have been met and are completed in Cyprus, it shall approve the cross-border conversion and issue the relevant court order.
Let's say you could just conclude in a minute, if possible.
Give me 2 minutes, 3 please. So once the company, once the court order is issued, the company would need to register with the ROC a copy of the court order. The ROC would need to register the relevant details of the company, as you can see them on the slide. And once the registration is completed, the ROC would be responsible to inform the register of the departure member state through the system of interconnection of registers, which, as Angelos mentioned, is not in effect until today, and this is done manually. Next slide, please. In relation to the timing required, the cross-border conversion shall become effective once the registration with the ROC is concluded. The timing would depend on the actions taken in the departure member state. And once the pre-conversion certificate is issued, the estimated timing for the issuance of the court order and the registration of the company with the ROC shall be 1 to 2 months. Next, please. There are some instances in which both the re-domiciliation procedure and the cross-border procedure can be invalidated. In relation to re-domiciliation, the procedure could be invalidated if it is done with the aim to create a new legal entity or to cause loss or affect the continuation of the company, to affect the property of the company, to render ineffective any legal or other proceedings, or to prevent any conviction. And in relation to the cross-border conversion, next slide, please. This would be invalidated if it turns out to be against the provisions of the Cyprus criminal laws, against the laws for the prevention and suppression of money laundering, social policy, taxation rules, and other measures and sanctions imposed by Cyprus laws. Next, please.
Thank you, Nicoletta.
Mrs. Leah, please. So the effects and benefits of the re-domiciliations is that of the cross-border conversion is that none of these procedures aim to create a new legal entity, but merely the existing legal entity shall continue in another jurisdiction. the shareholders of the company would continue to hold the shares unless they have disposed of them prior to the initiation of the change of legal seat. None of the processes would affect the property of the company and its rights. The obligations of the company shall be borne by the company, and the company shall be bound by all contracts to which it was a party unless those have been terminated. And the company will have the same obligations towards its employees if the employment continues, provided that the employment terms would be adjusted along with the Cyprus employment laws. So the company could continue its normal business undisrupted while being an EU company, enjoying all tax and other benefits that Cyprus has to offer, including the Mediterranean sun and its rays. Thank you.
Thank you very much. Thank you very much, Nicoletta. We have only a few minutes left to cover real estate. So it's not only the high volume of cross-border transactions, which seem to continue apace as investors seek out attractive acquisition opportunities, mergers, reorganizations, or conversions, as my partners have just outlined. The real estate sector is also on the rise, and it's actually a dynamic sector of the Cyprus economy, contributing to our country's GDP, along with tourism, professional services, shipping, energy, and construction. Real estate prices have increased by a large margin in most areas in the last years. Some statistics indicate an average of 7 or even 7.5% as of the end of last year, indicating a very strong growth in the market. Despite the various geopolitical developments, Cyprus has shown resilience, and one can say that it solidified its position as a secure real estate investment destination, attracting foreign buyers from all over the world who seek stability. Property prices, particularly in coastal cities, are experiencing significant growth. There is particular demand for high-end developments, beachfront properties, marinas, golf courses, but also individual villas, as well as energy-efficient houses and modern apartments. High tourism levels and increased demand for rental properties contribute to high rental yields, and this makes Cyprus a lucrative market both for short and long-term investments. Rental yields are said to reach an average of 6, 7, or maybe even 8% per year. We are also experiencing extraordinary growth in the office space sector, which is driven by Cyprus' appeal to international businesses, such as startups, technology, and financial services companies, as we have seen. So what do these companies actually do? They transfer their headquarters to Cyprus. Next slide, please. EU citizens possess the right to travel freely across the EU, including Cyprus. They have the right to reside, and of course, they can freely buy real estate here. Non-EU nationals may need to obtain a permit from the Council of Ministers, which in most cases is a formality. Additionally, there are straightforward and accessible pathways for non-EU nationals to obtain permanent residency in Cyprus. I put down the link here, which leads to the government website, and which sets out and analyzes the investment criteria and the quality criteria, which you can look on the slides later as we are running out of time. Please go to the next slide. Cyprus operates a modern and efficient land registry system where all properties and rights are registered. So why is this important? Because it provides peace of mind and security. Real estate is generally owned on a freehold basis. Before proceeding with a purchase, the interested buyer has the ability to make a thorough due diligence on the movable property. They have the right to request the seller to provide searches, which are carried out online on the land registry portal. Next slide, please. Such searches will reveal the registered owner or owners, the details of the movable in question, for example, that the same has a separate title deed. It will reveal any mortgages, liens, memos, or other encumbrances registered against the property. Next slide. Okay, in case where a Cyprus company is the owner of the immovable property, the shareholders of the company may choose to sell their shares to the buyer instead, and in such case, the buyer becomes the shareholder of the company, but the company remains the owner and keeps the title to the immovable. So in this manner, most formalities in transferring the title are avoided, but also transfer fees are avoided. As we have seen already, sale of shares in Cyprus companies is also tax-free, save for the payment of CGT, capital gains tax, by the seller. So a Cyprus private company limited by shares is a very popular vehicle through which immovable property may be owned. I have tried to illustrate why Cyprus is a strategic but also a safe choice for immovable property investment. It offers rising market prices, strong rental yields, and expanding opportunities in both the residential and commercial sectors. I don't know, Dan, if we have time for three small questions which were posed. Dan?
Yes, Leah, please go ahead with those questions. Please do.
Okay, one question came from India. Startup visa details. The scheme ended in May 2024. The government is going to renew it, though. I had a call with the relevant ministry a few days ago. They are aiming to get this new plan out by the year end. The criteria of the old scheme, the main criterion was that the startup had to be innovative, i.e. a venture developing new innovations, creating sustainable competitive advantages. The scheme was open and will be open to non-EU nationals. And I think we have to wait to see the new scheme to give out more details. Another question came from the UK. In the UK, sustainability is embedded in every contract deal, particularly in the public sector. Is that as prevalent in Cyprus? Well, Cyprus has made significant progress in embedding sustainability within public procurement. We implemented a Green Public Procurement National Action Plan, it's a mouthful, which was updated in 2012, and I believe it is currently being further updated. The primary goal was to integrate environmental considerations into public procurement processes. I have the feeling that, well, the UK is more general, the focus is more broad. In Cyprus, the focus is primarily on reducing environmental impact through careful selection of goods and services. Nicoletta, I think we had a question from Hong Kong.
Yes, there was another question. Yes, saying what has changed in Cyprus, and most fiduciary service providers have strengthened their KYC due diligence practices recently. Just to say that in order to be able to provide such services, you need to be licensed and a regulated entity. The regulators are either a Cyprus Bar Association or the Institute of Certified Chartered Accountants or the Cyprus Securities and Exchange Commission. Cyprus, as an EU member state, has to abide by the EU regulations and directives, and as all other EU member states, apply specific KYC and due diligence practices and policies. In that framework, and in order to also align with the international requirements, Cyprus service providers are asking for specific KYC and due diligence documents to maintain transparency, accountability, and ensure that there is prevention and suppression of money laundering and other criminal activities. And also the service providers are asking for those documents and information to be able to be subject to their regulators and do not face any fines or have any problems with their licenses. So this is just a normal process followed in all of the EU member states, and Cyprus as an EU member state shall abide by such requirements.
Thank you so much. So in conclusion, We hope that we have managed to explain to you in this short and limited time the key benefits of Cyprus. The sun has gone for the last hour or so because heavy rain. Maybe you can hear it outside my window, but this is not the norm. Most days are sunny and both locals and expatriates and people who live and work here enjoy. There was a lot of information to cover, but as we move forward, we encourage you to explore these opportunities further and consider how Cyprus can play a pivotal role in your business decisions and those of your clients. Thank you very much for joining us again. We look forward to answering any additional questions you may have offline. So feel free to contact us directly to the emails you see on the slide. Thank you.
Thank you, Leah. Thank you, everyone, for joining us.
Thank
Lovely.
you.